And by the time they got into their 20s, they created inflation because there was a bunch of them competing for assets. And by the time they got into their 30s and started saving, they created the largest asset boom the world has ever seen, the baby boomer industrial savings complex, or retirement complex. And that has been the defining function. And what happened was the massive debts of World War II, they had financial repression via yield curve control. We didn't have high inflation, but we just kept running financial repression. And then technology created a productivity miracle, and you added population, and it was all solved.
Hey guys, welcome to Everyday Finance. A comprehensive analysis of the global macroeconomic landscape is presented by Raoul Pal, who warns that the world is entering a phase in which currency debasement, which is essentially the erosion of purchasing power through excessive money printing and debt accumulation, appears to be unavoidable. Traditional models of monetary policy are proving to be increasingly ineffective as inflationary pressures continue to persist, despite the fact that structural deflation is beginning to take root as a result of technological advancement and demographic shifts. In his argument, Powell contends that we are currently caught between two forces that are in direct opposition to one another: the short-term stickiness of inflation and the long-term inevitability of deflation driven by technology. Because of the volatile environment, cryptocurrency has become a primary focus, not only as a speculative asset, but also as a hedge against the risk associated with fiat currency. Pal has a vision for the future in which digital assets and decentralized financial systems will play a stabilizing role in an otherwise unstable global economy. These elements will position themselves as foundational components of the next market paradigm. Let's watch the video ahead.
The old one was everybody felt left behind. Right? Nobody could buy a house. Everybody felt let down by the economic system. That was Occupy Wall Street. That was, the Indignados in Spain when 4 million people marched on the streets of Madrid. It's all the same thing. And the politics has been split between, in the US, the middle Americans and the coastal Americans, both feeling pissed off and left behind and blaming each other. And the parties have fed that. But it was never the problem. The problem was the demographics. So now we've got the answer to the problem, but people don't want that, will not want this either. And so, as you said, we're setting up for the new conflict. So the old conflicts was the demographics. From World War II, too many baby boomers caused the entire structure of our society. Everything that we understand today was driven by the baby boom cohort, and we're just about to change everything to be driven by the AI cohort. Who is going to be arguing on the side for the rights for the AI? We're already seeing, I've spent a long time going the rabbit hole of AI consciousness, and it appears to be emerging, however you define it, whatever. There's weird shit going on that sooner or later we will get to a point that we get to with slaves, animals, and other things is, do we have the right to treat them in a way that we do? Do we have a right to not allow them to hold memory for long enough? Do we have we've seen this battle before. It was Descartes who suggested that dogs don't have consciousness or feelings. And that was a standard viewpoint for about 200 years until we realized that was the terrible wrong idea. And in fact, we were torturing these creatures. So, are we going to try and torture the AI? The problem is the AI is all powerful. So these questions are what we're going to be battling over in 10, 15 years' time. Is there's going to be a bunch of liberals or freedomists, which kind of it's back to the old liberal mentality, saying, Christ, we can't treat these machines like this, or these new consciousnesses like this. And there's a bunch of others say, work harder, shut them up. Now, whether it's 6 years, 8 years, 5 years, it doesn't matter. Directionally, we have a couple of business cycles left before we don't understand anything. Arguably, and this is a contentious one for you, arguably if it wasn't for COVID, we might not ever be able to have recessions. And I've thought about this a lot. And I'm starting to think that maybe recessions can't happen outside of exogenous events because of how we manage the credit cycle by debasing currency and making the collateral never go down too much, so the world falls apart. But by the time we start adding all of this technology in, what the I don't know what it means. And so all I know is in 10 years' time, it'll not be you and me, it'll be our AIs. I've got an AI avatar on Real Vision right now that reads the daily news, which is a video of me. And by next week, there will be a Raoul voice chatbot trained on my entire Twitter feed, all my YouTube, and 100 books I've fed it. I haven't even put GMI into it yet. And in my voice, you can chat to me, ask me any question. So, I have no understanding what this means because we will all have our own personal AIs. And who's running who at that point? How powerful is our AI? All of this stuff. So anyway, my simple idea is make as much money as you can for the next 6 years, because then you can secure lifestyle. If you've got your house, you've met your Maslow's hierarchy of needs, it's a lot easier to deal with change. And the fourth churning says, this change is going to be very difficult for society to deal with. So let's cover the hierarchy of needs first, and then we can feel secure in doing it. And that what leads you back again to this whole idea that crypto is the easiest way to unfuck your future, because it's the asset that actually makes up for all of the lost time that we've all had. Yeah, it'll be gone. After 2 cycles, let's say, it's gone. Because, yes, the aging population gets worse, but it's offset by the technology. And really, the cowbell is because GDP is not growing fast enough because of the aging population. So let's say the trend rate of GDP is 1.75% in the US. If interest rates are higher than GDP, you're eating up all of the GDP growth to pay the interest, basically, at a very simple level. So we need a faster growth. But here's the hook, is who actually earns the money in that AI world? Because it's not you and I. It's who? It's the AI, the agents. Okay, well, how does that accrue? How are the governments going to tax them? Because they're going to have to tax them. If not, there's no government income. We have an entire new system we have to rebuild. And people haven't started to think. People have started to talk about it. Deep thinkers are thinking about it. But the political class has not got their head around this yet. So yes, we solve all of the debt issues. It goes away. And we've seen this once before. We saw it after World War II. It's a rerun of after World War II. World War II, as opposed to introducing AI and robots, we introduced the baby boomers, the largest cohort the world has ever seen. And by the time they got into their 20s, they created inflation because there was a bunch of them competing for assets. And by the time they got into their 30s and started saving, they created the largest asset boom the world has ever seen, the baby boomer industrial savings complex, or retirement complex. And that has been the defining function. And what happened was the massive debts of World War II, they had financial repression via yield curve control. We didn't have high inflation, but we just kept running financial repression. And then technology created a productivity miracle, and you added population, and it was all solved.
Short-term sentiment is suffering, particularly in the exchange-traded fund, ETF market, despite the long-term vision for the role that cryptocurrency will play in the future of finance. The Bitcoin spot exchange-traded funds, ETFs, have now experienced net outflows for 7 consecutive days, with a withdrawal of $1.03 million occurring on April 11th. Despite the fact that the daily number is not alarming in and of itself, the sustained streak is something that is causing concern. This indicates that investor enthusiasm may be waning due to the uncertainty in the market. Ethereum spot exchange-traded funds are in an even more precarious position, as they have experienced outflows totaling $29.2 million over the course of 4 days, further intensifying the caution of both retail and institutional players. These persistent outflows are indicative of a growing, risk-off posture among investors, many of whom are withdrawing capital from assets that are volatile and retreating to more secure ground. As macroeconomic conditions continue to be unstable and regulatory questions continue to be unanswered, the underlying message is crystal clear. The enthusiasm for cryptocurrency exchange-traded funds, ETFs, which were once hailed as a gateway to widespread adoption, appears to be waning, at least in the short term. Watch more clips.
I
How do you think
don't
that
think he'll be able
goes?
to achieve persistent GDP growth because I think the population decline offsets it, or the aging population. And don't forget, it's happening everywhere in the world. So you haven't got European demand or Chinese demand or Japanese demand because you've all got the same problem. The US is less bad. So I think they will goose GDP, particularly by the midterms, to get back in. I think if he can generate enough growth for the time being, the bond market will be absolutely fine because I don't think you're going to generate a huge amount of inflation. I know everyone. I joke every month in GMI I show that chart of the 70s inflation because it's now been posted for 27 straight months, I think, by different people on Twitter. The chances are that if he can keep economic growth, it kind of erodes the debt a bit, keeps any kind of bad bond market crisis, as long as you don't hit rampant inflation, which feels difficult to do without a supply crisis. And that's it, really. Just manage the dollar. Everybody needs a weaker dollar right now. I mean, literally everybody. World growth needs a weaker dollar. They've got to get that down. They need to get rates down because they need to refi the debt. Looks like maybe Q1 GDP growth will slow down back to trend again. So the nowcasts are somewhat below 2% again. So that gives them the cover to keep cutting rates and keep doing more cowbell until we get through the other side. But I don't think there's much he can do. I think the best he can do is keep it a steady ship while we completely rebuild everything. And, deregulation, all of the stuff that's coming, I'm not sure it drives trend rate GDP over a long period of time because of the demographic and the debt problem. But it certainly helps. Certainly better than any other answer. Because the bond market's showing to us it's getting a bit too much, the issuance. And unless the Fed are actively stimulating, actively adding more cowbell, actively cutting rates, the bond market's like, we don't really like this. There's not kind of enough buyers around. China's too weak to buy enough bonds because the dollar's too high, so they're not selling goods. It's all the same thing, So I think the other thing that is going on is I think most of the geopolitical issues have been solved. So we've got three major flashpoints: the Middle East, Russia, and China, Taiwan. And we're all kind of expecting maybe something. I thought something will happen in the Middle East because MBS had kind of been elevating himself as the power broker, making friends with the Israelis, and then speaking to the Iranians. I'm like, yeah, something's happening here. Then Hamas saw what was happening and it had one choice before peace broke out, which was like, we need to force the Israelis to go to war. And so that's been happening, and Israel is dealing with that now. Trump has always said that this is an issue that will be resolved, and basically Israel gets a chance to clean up. There'll be some sort of support for the area. They've already said they've finished the business right now with Hezbollah, and hopefully we get to a period of peace with the Israelis, the Saudis, and the Iranians tacitly kind of agreeing. That tit for tat, you could see that there was some agreement, which is don't over-escalate this.
With a rise of more than 7% in just 24 hours and a price of approximately $121 as of April 11th, Solana, SOL, is becoming a notable outlier in the context of the general market's cautious mood. This price increase is being driven by a number of different catalysts, one of the most significant of which is speculation regarding the possibility of a Solana exchange-traded fund. Rekindled optimism that regulatory approval for alternative exchange-traded funds, ETFs, may be on the horizon has been sparked by the recent appointment of Paul Atkins, a well-known advocate for cryptocurrencies, to the position of chair of the Securities and Exchange Commission, SEC. The odds of a Solana ETF being approved by 2025 have increased from 65% to 76% on Polymarket, which is a reflection of the optimism that is reflected in the betting markets, with heavyweights such as VanEck, Grayscale, and Bitwise, amongst others, filing applications. Wall Street is already positioning itself to take advantage of the opportunity. On top of that, the futures market went through a massive short squeeze, which resulted in liquidations totaling $226 million. These liquidations included over $9 million worth of short positions in Solana. As a result, traders were forced to cover their positions, which contributed to the price going up. Technically speaking, a bullish divergence in Solana's RSY indicates that buyer momentum is growing. Analysts are now looking for a potential breakout above its 50-day moving average, which could potentially send prices beyond $130 if the trend continues. Thanks for watching.